That's when we saw there is a problem of adverse selection and there is an opportunity. Someone like Qiro can come and build that middleware to communicate between TradFi and DeFi.
There's a bunch of different ways to describe it. I think the easiest way to understand it is as like a credit risk underwriting protocol to some degree that also has a marketplace attached to source credit deals. It's a really unique platform, honestly. It's the kind of product that doesn't exist in the market today. And, if it's successful, I think there's a lot of traditional players that would be very interested in what you're doing.
DeFi is really great at capital formation. I think that is the sole advantage that we have here is like anyone with a wallet sitting in any part of the world can buy these assets.
Well, so we're back with another episode of Proof of Coverage today. And, today we've got the Qiro team who, I've had the pleasure of working with over the last couple of years and who are building a really interesting product within the realm of private credit. So, Qiro is a company that we invested in out of EV3. We brought a number of our friends in as well. So today we've got Akshay and Nishikant, who are the founders of Qiro, to tell you a little bit about the product and their story. So maybe I'll just start there. Akshay and Nishikant, how are you guys doing? What's going on?
We are mostly busy building and we are at a stage where we're going on a mainnet. So super exciting period for us. So yeah, we're mostly busy working hard.
That's awesome. You were just, we were riffing beforehand. It sounds like you guys have some late hours going on right now. What's been going on?
Yeah, I think mostly we're just pushing things to the closure. Like there are a lot of pieces you have to fix it, like the kind of problem we're trying to solve. So we're just making sure that everything is tight knit and watertight and so that we can just focus on the execution once we launch our first deal on a marketplace.
That's awesome. Well, we'll get into all of that in terms of what Qiro does and how it works. But, before we do that, I wanted to start by just talking about, your backgrounds, because I think crypto is a place where it feels special because it's incredibly global, right? We're all these PFPs sitting on Twitter talking to each other 24/7. And, it doesn't always resonate that you're talking to people all over the world that are building crazy things that have such different backgrounds than you, but it just feels super coherent. So, it would be awesome if you could start just by giving us some of your background. Where did you come from? How did you get to where you guys are? Was it sort of the same type of path that you see US entrepreneurs take? Any color there would be amazing, guys.
So if I were to talk about myself, so I come from Maharashtra, which is a state in India. Mumbai is the capital of Maharashtra. And from childhood, I was always I always was interested in playing games. And I think that's kind of funny then, because of which I kind of ended up taking computer engineering as a course, so that without even knowing much about it, that I'll get to make a lot of games. Then I realized maybe it's not that practical, you like playing games, but that also doesn't mean that you'll make the games. But then eventually I realized that what I'm good at while I was doing my undergrad. So I was very active when it comes to talking to people, building communities, and building things from scratch, organizing events and stuff. And I was also I was lucky to be a part of few of the design and innovation bootcamp programs by Stanford GSB, or for that matter, MIT Media Labs, which gave me an insight what is happening all across the globe in terms of startup, what all things are happening in terms of innovation, which made me realize that one, I'm good at managing things, building things from scratch, or for that matter, solving the particular problem. And in general, I realized I want to start my startup while I was studying, but I wasn't aware of the fact that what all things needs to be done to kind of build a particular company, what all resources are required, how to kind of go about it. Then eventually I started working in FinTech space, where I got an opportunity to work with early stage consumer lending, India's first FinTech, which was doing consumer lending loans on mobile apps. We were the first ones to kind of do that. And I was the first growth hire over there. That's how I entered into FinTech world. And eventually I kept working across multiple FinTech companies like SME FinTech. India is one of the largest profitable SME lending FinTech. Then I worked for corporate lending and supply chain financing FinTech, which is launching $1 billion IPO in India. So work closely across these founders and learn how to build a scalable, profitable FinTech businesses. In my last stint, I leveraged that FinTech experience and worked as a capital sourcing head for a New York-based B2B marketplace. I ended up raising more than 100 million in debt without having a much experience as an investment banker, but I ended up raising more than 100 million in debt for US, UA and India market. So pretty much I understand fintech lending and capital sourcing. So that's my journey till now. And then I kind of joined hands with Nishikant. I know Nishikant from last 4 or 5 years. While he was working in the previous organization, we used to chat and exchange notes around, especially the TradFi lending and the DeFi lending. And that's how we got to know about each other. So that's the journey till now. Yeah.
That's awesome. And yeah, when we first met, I actually think I was introduced to Nishikant first because you guys used to run or help run a program called Gravity X. That was an accelerator in India. But I've had the pleasure of interacting with Nishikant a number of times, and he's a ferocious builder. So, Nishikant, maybe do you want to give us some background on yourself and how you came into the space and what sort of informs how you make decisions about what you want Qiro to be?
Definitely, yeah. I mean, I'm also coming from sort of a same background as Akshay, a small town from India in Maharashtra. I started studying there only, and then I went into computer engineering. I was always fascinated by mobiles in general when I was a kid, given a lot of things that you can do on there. So I wanted to become an electronics engineer, but ended up going into computers, then sort of joined the normal path of getting into a job and then going from there. So in my first stint, I was working as a data science engineer, where I worked at a multinational company called Zorient, where they had a lot of banks as their clients. That was my introduction to finance in general. Otherwise, I was building stuff around AI, where we would have video generation tool, chatbots, and then I kind of got into all this insurance and then derivatives. But that kind of got me a lot interested in how finance works in general and how data is really useful. So I got introduced to underwriting there. We built different models which could help the banks to price the insurance better for their clients using the social data or adverse media, things like that, which was very interesting. Parallelly, I was reading about Ethereum in 2020 when DeFi summer was just starting. So as part of this chats on Telegram where people would talk about the next DeFi farming app, or I think back in days, a lot of things were invented then only, like leverage yield farming or stable coins. Even DAI was Sai back then, where it had a single collateral. So I've seen that entire shift from DeFi having all the degen apps to the point it is today, where everyone on Wall Street is investing into these tokens, which is amazing. And then in my last stint, I think I would consider that as a peak point in my career, where I got introduced to amazing founders, Mahesh here as well, where we used to share deals regularly and then trying to figure out where do we invest. So I was part of a fund called Gravity X Capital. It was an early stage fund which had a very interesting model. We would work with founders very hands-on first 6 months, helping them build protocol mechanics, tokenomics as well, bit part of that. And then I was closely working with founders, which helped me a lot to understand how this industry is going and what are the cutting edge trends, what people are trying to build that will launch in next 1 or 2 years. So yeah, did spend a lot of time there. And then Akshay used to advise us on the fintech side of things. That's how I know him. We used to interact a lot on what is possible into credit or in general fintech and what could come on chain. So yeah, and doing that, we kind of came to a point where we saw that RWAs are going big, and credit is a market that no one has touched a lot, or it's sort of a market where crypto is still in backwards payments, the industry where crypto has gone huge, but credit, it has always gone bust with one or the other, where a lot of people have lost money. So we thought that there's a chance to build something that is more traditional and risk savvy, so that a lot of capital can flow. And I think with that thesis, we started Qiro.
That's awesome. Yeah, look, I always love to sort of frame your story as a classic example of why crypto is so interesting. Insofar as, you guys came from a very different background. You natively sort of found capital markets and a lot of this technical stuff yourself. And then you've taken a very different path to come into this market and have since raised capital from some pretty strong investors and built the product. So I think it's just an awesome example that there's a bunch of different paths to get to the right answer within crypto Twitter. And I'm super excited about what you guys are building. So maybe with that, let's get into it a little bit. Qiro is There's a bunch of different ways to describe it. I think the easiest way to understand it is as like a credit risk underwriting protocol to some degree that also has a marketplace attached to source credit deals. It's a really unique platform, honestly. It's the kind of product that doesn't exist in the market today. And, if it's successful, I think there's a lot of traditional players that would be very interested in what you're doing. But, it would be awesome for you guys to talk a little bit about, if you don't mind, how you found the opportunity to begin with. I know, Akshay, you were working in the space a little bit. You were seeing a lot of what was going on in the ground, but what made you decide to jump and run full steam ahead at this idea versus, maybe any of the other ideas you were seeing through GravityX?
Yeah, like I said earlier, so I worked for multiple fintechs across different lending products. I personally have like that hands-on experience across different parts of that entire lending journey, right from origination to deployment to like operations to partnerships, all sorts of things I have done across this lending stuff. And I have worked on both sides of the table, the borrowing and the lending. Then I realized like if you look at a global scale, so there is like lack of capital for the local market. So local market heavily relies on local banks or maybe local funds to kind of source the capital, especially the fintechs I'm referring to. And they're very, very well, like restricted to that local market. But when it comes to sourcing the capital from outside India, so it was challenging. First, like they don't really know like whom to reach out to and if they will trust their model and how exactly overall things are going to work. Essentially, I felt that when it comes to like DeFi or like on-chain world, the capital, this is like I'm talking about Akshay 3 years back or like 4 years back. At a click of a button, you can access that capital. Wow, that's like next unlock. How do you kind of, use that capital and leverage in lending market? But then it's not just that, the capital can move at a click of a button with the technology, but how can you like kind of make it happen? So that's what, like made me think about, what is that one idea I want to work on. So then like Nishikant said, we were kind of, exchanging notes. Then I realized, fine, I understand this market very well, the TradFi lending space. And Nishikant understands, he's like that one person, he knows like anything and everything when it comes to DeFi, the protocols and like recent updates and what's happening and what are the interesting solutions people are coming up with. So we thought it could be a good partnership. So we started talking with like tons of these RWA marketplaces and different DeFi protocols and different liquidity providers and VCs to understand what is the scope of this particular thing. In general, what we realized, there is a problem of adverse selection. So if I have to kind of, simplify it, in TradFi, without collateral, I mean like unsecured fashion, people are building multi-billion-dollar worth of books, like right in India. And there is no collateral which is being given. It's just purely on the transactional history, the audited balance sheets and stuff. Based on that, they are, like extracting data, creating policies, and they're trying to come up with like different innovative ways to build out like a loan product. But when it comes to like DeFi world or like a on-chain world, although the capital was there was like it was easy to kind of send the capital, but there were no models to figure out, and like figure out to kind of, access these real world assets and figure out the risk associated with these different real world assets. That's when we saw there is a problem of adverse selection and there is an opportunity. Someone like Qiro can come and build that middleware to communicate between TradFi and DeFi. So I think that's how I kind of got convinced and decided to kind of, start Qiro and join hands with Nishikant.
That's awesome. And you mentioned something I think is interesting to dive deeper on a bit, which is maybe like the differences in the credit environments in different parts of the world. So you said in India, for instance, like there's less collateralized lending and it's more based on like past transaction history. I'm curious to hear a bit more about like what does that actually look like in practice and how has it influenced or impacted the way that you're building Qiro in terms of bringing that kind of environment and ecosystem on chain?
So when it comes to lending, so a lender or a fintech cannot solve every and all like kind of problems or lending solutions. They have to be very specific on what kind of borrowers they're targeting with, what loan product they want to offer, and everything, like revolves around that particular thing. So because I worked across multiple lending products, I realized that how different borrowers are treated. And for even if it's a SME loan, even with the ticket sizes are higher or lower, like loan ticket sizes, it's a different risk model altogether. So essentially, you have to be as specific as possible whenever you are picking up a particular loan product and you are acting as a fintech for giving a loan to a particular borrower. So what made me realize is, because these fintech companies evolve, so earlier it was on pen paper, and then eventually everything moved like on basically web 2 kind of tech came into the play, and people started using technology, everything was getting online, and people build models on the top of it. Then people started using data science, because of which they were figuring out how to kind of evaluate the risk, how to price the risk, and all of that stuff. So it was a journey, like for a decade or maybe a couple of decades worth of time it took to reach this particular point. But let's just say if you compare it with like a DeFi history, or like maybe on-chain businesses kind of in history, it's like very limited. So eventually, although everything is on-chain, it will kind of take time to kind of come across that particular model, what will work and what will not work. There needs to be somebody to kind of figure out those model which will fit one, how the DeFi industry works, and at the same time, if you are targeting RWA, you also need to understand how the RWA industry works. So someone who understands both RWA industries and a particular asset class, it could be say like a SME financing, or for that matter, financing a particular fintech, which falls under like an institutional lending or a wholesale lending, or financing invoices. Every different asset class has a different model altogether, and you need to understand the risk associated with those assets. And like, how do you plug that understanding of that risk with the on-chain world and build in a confidence amongst those on-chain investors to deploy and attract that capital? So that's going to be the key to scale this RWA lending in general in future, is what we believe.
Sweet. And then, yeah, I have a question on RWA lending, or maybe one or two, and then I think Mahesh will probably dive into the product in terms of, like, you gave us some of the history of how capital markets and lending markets has evolved, like specifically in India. And then I'm curious, like, how you see the current state of DeFi lending, and then also like what kind of innovations or things that you want to change, or paths that you think the industry will take into the future in terms of product. But on RWA specifically, so I've been doing like a bit of research and learning on these, because one of our clients where we run their podcast had on a project called Mystic Finance, which is basically looking to reduce the redemption time for RWAs and make them more kind of DeFi ready. So I guess one, how do you all think about like vertically integrating or not in terms of the RWA lending market, in terms of like the specific challenges that RWAs might have in terms of this redemption time and kind of legal red tape back and forth? They obviously seem like it's like one of the largest markets in the world in terms of all these assets that can be brought on chain, but there's also some barriers to doing that, right? With redemption times and other things. So I'm just curious how you guys think about making RWAs DeFi ready and, getting them on chain, fitting them into your protocol.
Maybe Nishikant, do you want to take this up, like start, and I'll fill in as and when it is needed?
Sure. I think you pointed out, right, Connor. So like the redemptions have been like the biggest problem, because DeFi capital is used to liquid investments. Like they would want to they want to enter and exit at any point of time. People don't want to give up custody, instant liquidity. Yeah. But I think the point here is these assets by default are like with long maturities. That is the reason credit has been illiquid. And that's where I think crypto can come into play, where one, we can create a very niche secondary market where, because crypto has that sort of risk appetite as well, where we could have market makers or even different parties that understand liquidity and also credit risk. I think that's where we can also plug in the Qiro piece. We have been talking with, we know Mystic well, and then a few others as well, where they are trying to set up these sort of liquidity house for all the credit protocols to create a meta market where all these tokens can be interchanged, or even you can swap when you want and then maybe sell it at a discount, right? But I think we're still like maybe 6 months to a year far from that. I think the most important thing for that to exist is the market makers being able to actually verify like what the assets are, and then having a fair price to value them. Because at this point, most of these assets are underwritten privately. There is no strong backing in terms of how these assets are originated, what is the underlying, how do you get the NAV, right? I think that's where we are creating all this risk assessment tech, where how do you know that how this loan was originated? What is the actual price of that in terms of dollars, maybe if it is from the emerging market, and then how do you sort of price it for early redemption? So it's a mix of getting the TradFi data on chain. That's where the underwriting system comes into play, and then helping these market makers who have liquidity to price this better. So that will help the redemption times. Also, one thing that seems to work for us at this point is we are targeting very short-term sort of portfolios where the underlying is like 7 days to a month, maybe. So those assets are easily redeemable. I think that has been like a workaround that works when you don't want to go into a secondary market, which might or might not exist at this point. So that is like in one way to get this going. And I think once the market matures, I think these things are definitely required. And I completely agree to your point that there needs to be a vertical integration. You cannot just build a market and then hope that it will work, because you have to get like a lot of these parties on the same page, that, and then only the market will kind of scale from 1 to 10. Yeah.
Right. But I think that makes a lot of sense, actually. And that's why we have smart people on the podcast to educate us as the host. Like, you're kind of saying that the underwriting of the assets comes earlier in the sequence of events than the redemption time kind of reduction that Mystic Finance or some of these other players are creating. Like, you need to be able to understand where the assets came from, have them be verified in some way, have an understanding of their value before there's loans taken against them, before there's potentially this like redemption period issue. So it looks like you're building kind of like further down the stack, but for infrastructure that is needed to power all of this.
Exactly. I think one thing that I observed is like DeFi is really great at capital formation. I think that is the sole advantage that we have here, is like anyone with a wallet sitting in any part of the world can buy these assets. But when it comes to actually pricing these assets or selecting, I think Akshay mentioned this point of adverse selection, where there's no one like kind of doing the policing job here, which is the most important thing, due to which like a lot of people have, seen the bankruptcies and like people losing their money like in the credit deals, right? So it's very important that someone does this third party risk evaluation kind of, which is very similar to how rating agencies would work in TradFi, but some parallel needs to exist in DeFi as well for these markets to grow.
I want to add in few things over here. So I personally believe that it's not just us that, we'll be kind of underwriting this kind of deal. So it's Qiro is kind of building that communication layer or infrastructure, which will bring in the experts who know how to evaluate the risk. Then Qiro will also bring in liquidity. The Qiro's infrastructure will communicate with the liquidity, which is staying on chain. It could be stable coin to begin with, and later on, different kind of assets can also come into the play. And on the top of that, there are different kind of assets. It could be invoices, it could be machineries, or it could be EV charging stations, or any kind of an asset. It could be a FinTech, it could be a DePIN network. So we want to kind of streamline that communication between all these parties in terms of how to look at these assets, so that, let's just say I'm a liquidity provider, I can chip in like $500,000 worth of check sizes in across multiple deals. I want to like spread out my risk, but I don't really know to evaluate the risk associated with these different asset classes. So that's when, like Qiro's infrastructure come into the play. We kind of collect the data, we streamline the data, put that data and the ratios in the structured format. So for anyone to kind of make sense out of that data, we will kind of present it in a format that if you are actually interested, it will make sense. Then it will be easier for you to decide if you want to invest or not. At this point of time, that comfort, that easiness it doesn't exist. And if you are an expert and if you know things well, but otherwise there is no way to kind of streamline any and every asset class in general.
I think one of the interesting things here is sort of the distinction between, what might be considered old credit and new credit, right? The way lending is happening is changing. As you mentioned, data streams sort of coming on chain sort of changes the way that you actually underwrite the loans themselves. So I think one of the things that's inherently interesting about Qiro is that you guys are going after an interesting set of assets that might not already be focused on at scale. And, one of the categories that we've talked a lot about that we're super excited about, as are you, is DePIN. And I know that you guys have looked at potentially building DePIN-related lending functionality beforehand. Could you talk a little bit about sort of how you see the space growing for DePIN-related lending and sort of what kind of deals you guys are most interested in doing?
Yeah, I think when it comes to DePIN financing, definitely there is a scope to kind of unlock that credit across these DePIN networks. But I personally believe that one, there needs to be some sort of a history. So based on which we can kind of underwrite the on-chain data and come across a model. And it also depends on the fact that what kind of a DePIN network is that. So it could be like a solar DePIN or telecom DePIN or EV charging DePIN, any kind of a DePIN network. So based on the use case, and the model, we can figure out different loan products. So eventually think of it as like the loan product exists, but what loan product fits into that particular DePIN network and what risk model or credit policy you have to build to unlock that credit in that particular network. So it could be a way that line of credit only works for a particular DePIN network. And it also depends on the fact that who are you giving a loan to? Are you giving a loan to a DePIN network itself, or for that matter the nodes which exist in that DePIN network? So we can like unlock line of credit as a product for that DePIN particular node which exists in the DePIN network, or we can collectively give a loan to a DePIN network, say someone who is running like a GPU network. So we can give a collective loan to them and they can add on GPUs overall across that network. So it could work in n number of ways, but just to simplify, somebody needs to kind of, unlock how the DePIN network works and streamline that with the different risk models and unlock different credit products. And that's what Qiro is trying to do. And maybe Nishikant can talk about any specific use case and so that you'll understand better. Yeah.
No, I think DePIN is a very interesting business model that I've seen so far, like having a lot of people coordinate and build these revenue generating networks. I think it's probably like one of the DeFi use cases which actually generates a lot of capital through maybe selling the radio frequency or even the telecom use case that Helium has been doing. That's amazing. Like that has scaled so fast and it has actual like real world usage. So personally, I love those businesses a lot. Like even I just read about Daylight today where they kind of got through this new round that they are building the solar electricity network. So these businesses are always been like state owned or like, very centralized. Getting these networks unlocked, I think that is creating a very different market altogether. One thing I believe in DeFi, and DeFi is actually a best place for these protocols to raise money because they are on-chain. So they don't have this friction where what is stablecoin or like how this thing's gonna work. They know how tokenization works, or they're in general been speaking about those things. So I think these protocol can act a very like a transparent originator here, because the entire history of these assets, be it with respect to like transmitting data or earning revenues, that's all on chain. So it's possible for everyone out there to underwrite and give a loan to them. And there are a lot of structures that you can build here. I think now because these protocols are becoming institutional, where they have these farms where they're creating like bigger projects in terms of solar or even helium, for example, right? So if they go to any banks or traditional credit funds, I'm sure they'll not be as welcoming as the DeFi lenders would, because they already know how these things work and they also know how to, actually they are great at pricing the token risk than the banks or anyone out there. So I think that is where the edge exists, that someone like Qiro can build a native marketplace for DePIN assets, and we can do a lot of interesting things. Like you can think of having like one miner or thousands of miner pooled into a securitized pool, and then you can have this cash flow stream into different tranches where different sort of investors can take exposure to that, and then the networks can actually grow on the internet because they are raising capital here, deploying here, and everything kind of stays in this ecosystem. There are a lot of traditional products like capex financing or buy now pay later, where you give credit based on previous history or sort of help people to buy assets on credit, which is also a great thing for networks to grow. Otherwise, they are putting out tokens, which works sometimes, but it can also harm the project in the long term as well. So I think it's very interesting if we can partner up with these guys, and we already have few projects in the pipeline where they are super interested to work with us and sort of use Qiro as a specialized credit desk, which can help them grow their network.
Cool. Yeah, and I think DePIN is now starting to get to the point where fractionalization of a single node, a group of nodes, and their kind of related token streams is becoming more of a thing. So like we've seen this with Glow V2, which just launched basically like crowdfunded or fractionalized solar deployments where, you know, people around the world can contribute capital to, I think, even before the deployment is live, right? Like pre-fund it and then grab a share of those like token rewards for themselves. And then there's also a kind of like deep and wide platform called Fractals, which is doing the same thing for a few different DePINs. So GeoNet, Helium, and XNet at the moment. So this is like less, you know, lending against, but basically like this is a GeoNet miner here that's already deployed by some, you know, professional institutional deployer. It has like a related stream of GeoNet tokens, which you can see the history of, which is pretty cool, given that this is all on chain. And so this deployer basically sold shards or tokenized the deployment. And so people that put money in basically allowed the deployer to receive money up front in exchange for like a stream of tokens over time. And so it's not necessarily like debt underwriting, but it's almost like tokenization level of underwriting. But I guess it's just a kind of a real world example of something similar to what you guys are talking about. And I think it would be great for DePIN to have debt underwriting as it matures, you know, as some of these protocols start to earn real revenue and accrue those to their tokens. I think it'd be great to see you guys work together with some DePIN. So excited for that.
Yeah, for sure. You know, one of the last directions I want to take this in, guys, just because I know you guys are growing really quickly, is sort of hiring and the team and everything. So can you tell us a little bit about like what Qiro is today? How many of you are there? What does the growth look like? And then I think you mentioned beforehand, you're particularly looking for BD type hire, particular in the US. You know, can you tell us a little bit about what you're looking for and how they would contribute to what it is that you're building?
Yeah, I think that's a great question. We would like to touch upon that part. So when it comes to Qiro's growth, we are growing exponentially. So we are a team of 12 right now, including Nishikant and I. And most of us are like, you know, focusing on like with the current stage, but like if we have to unlock the next stage, so we might need some people who are there on ground, maybe in New York, maybe in London, who understand, you know, how to unlock this liquidity and like how to kind of streamline that liquidity for the marketplace side. And at the same time, a person who also understands this RWAs and FinTech would be a great fit. But obviously, like we are trying to unlock as much as liquidity as possible because we are very strong when it comes to unlocking different kind of quality assets. So at the same time, we are looking for a person who can kind of, you know, come in and like lead multiple activities, like multiple projects which are going to happen under the Qiro's umbrella in terms of tech. So obviously, like we are there, but we also need people who we can rely on. We can grow exponentially. So right now, we are a team of 12, and we are looking to hire these two people, like which could like bring in a huge value add for the company. And at the same time, even before we like kind of launch the underwriting infrastructure for others, there are people who are following up with us, like if you can help us unlock this underwriting problem for our network. So we have partnered up with one of the large partner right now. As we speak, we are underwriting a $50 million loan, but we'll share more about this particular part as and when it gets public. But right now I can just say that things are growing and moving very fast.
That's awesome to hear. Yeah, look, I highly recommend, if you're working in BD and you're interested in credit and you're at a fund or you're doing something today where, you know, you're working for someone that you don't like, but you have a ton of expertise and skill set in the space, you should definitely check out the Qiro guys, because they're doing something unique and differentiated within private credit, and they're growing like wildfire. So with that, guys, look, I think this is a good place to wrap it. This has been a great episode. I think we've gone through a lot of what mattered in terms of the platform itself, your background, and why this is so interesting. And we're super excited for what you guys are doing. So maybe sometime in the next year or two, we can do a catch-up episode as you guys continue to grow. Maybe with that, if you could just wrap it up in terms of telling our audience where they can find you, where they can learn more, and if they're interested in, maybe working for Qiro, what maybe the next steps are, that would be awesome.
Yeah, I think you can reach out to us on Qiro on Twitter. So that's a way to go about it. And otherwise, I think you can pretty much reach out to Mahesh and the team, and we can get on a email, and like we can figure out how we can work together. It could be a partnership. It could be like if you are interested to work for us, anything, we are open for chat. Twitter, LinkedIn, email, we are open for anything.
Yeah, I think we're all over the place. Wherever you direct, we would be there. I think one thing I want to mention is like there's a lot of traditional capital that's going on chain now. So we're definitely looking for people who have been on the Wall Street and maybe they understand how crypto works or they're interested to make that move. So we are kind of that company where they would get these assets to Wall Street or maybe kind of do the inverse basically. So definitely interested to work with such folks. Do reach out to us. Yeah.
Surprisingly, few of the TradFi funds from the Europe reached out to us, and they want to kind of work with us and to figure out how kind of things work in DeFi and on-chain, and they want to kind of do the POC with us by deploying some capital with us. So yeah,
that's awesome.
There might be more TradFi funds who might be interested to work with us. Yeah.
Awesome to hear. Well, this is another awesome episode of Proof of Coverage, and you can check these guys out on Twitter, through the EV3 website, and there's a ton of exciting things ahead for Qiro. So thank you so much for the time, guys. And with that, let's wrap it.